It's now time to begin our conversation on the program, which is on Nigeria's sovereign debt market, or bond market, as you may want to also call it. And we have here in the studio Abiola Razak. He's the head of research and strategy at the Associated Discount House. It's to my far left. Thank you, Abiola, for coming on the program. And to my immediate left is Femi Ademola. He is also the head of research at BGO. Thank you very much, gentlemen, for coming on the Monday morning. Okay, let's quickly take a look at these ratings from Fitch. It's about a week since this report was released, and a lot of people are looking at the fact that perhaps it's a good sign that despite the challenges that we're facing here in Nigeria, we're still not doing badly. The economy is on a strong footing, and we're moving forward. Let me start with Femi. What's your take on this report?
Yeah, thank you very much for having me here. The report is okay. The kind of rating that Fitch found Nigeria has stable outlook, it's something we should be celebrating. I want to say that, especially after a few weeks after S&P actually downgraded us from a stable outlook to negative. And the same S&P downgraded the French economy from stable to negative as well, in some sense. So it is something that we can be, I say, oh, nah, this is nice, this is good. At least it gives us some a sigh of relief, give us a sigh of relief, make us a little bit happy, saying, oh, you know what, it's not that very bad.
Not that very bad. Okay, let me hear from Abiola.
I think in my view, I think it's important to know that ratings are opinions. That's the opinion of Fitch. And of course, S&P downgrade is also their own opinion. The most important thing is to look at what the considerations were for giving Nigeria, for affirming the BB minus rating on Nigeria, which of course means that Nigeria is less vulnerable in the near term. And of course, we still face ongoing vulnerability to business shocks and of course uncertainties in the macroeconomic environment, which is actually the implication of the BB minus rating. I think the major thing they've actually looked at is to consider the economy from both the macroeconomic perspective as well as the political risk that Nigeria faces. So in my view, I think their view seems to be balanced. There's some positive in Nigeria today with respect to the external reserves, which currently sit around $39.4 billion, even though we're beginning to see some pressure over the last couple of weeks. But I think it's also very important to also notice that the Nigerian economy has been relatively resilient in terms of growth. But of course, the risk factors are still there, the issue of the political risk. We're all aware of the tensions in the north with respect to the northern insecurity. We're also aware of the vulnerability of Nigeria to crude oil prices, which has been on the decline over the last month, particularly now that we're currently at $88 per barrel, which is about 30 months low. So in my view, I think it's a balance of some of those positive and the negative factors that actually led to the affirmation of the BB minus rating on Nigeria, which I think it's relatively justified.
And now to know that this is coming after the rebasing of our economy. And I want to get back to Femi. You talked about the S&P 500 downgrading, S&P Standard & Poor's, just talking about the global markets index there. The S&P, that Standard & Poor's rating downgrading us, and now Fitch saying that we're not doing that badly. How would you reconcile both? Even if we see that are just opinions, really. But opinions may count in a way because they assessing the economy and looking at it from the expert's point of view.
Like Viola said earlier, it is an opinion. S&P said you are now negative from stable. It's an opinion. Fitch rating said you are stable. It's an opinion. Now it depends on the weight you give to each of them. If you feel that S&P has more weight than Fitch, then you probably go towards S&P. If you feel that Fitch is more valuable in terms of what the rating they're going to give, you go into Fitch. Now I must state something, which is part of what he said earlier. In terms of opinion, everybody have what they call a rating scale or recommendation scale. Now the point is that there is a lot of wide range between what you call negative, stable, and what you call positive. Now for Fitch to say, okay, you guys are stable, I mean, it's a wide range of where you can call stability. Now, when I do my own rating, for example, I'm going to give that example. I'll say that if an investment if I look at an investor valuation and I believe that this stock can increase in value for more than 20%, then I'll say it's a buy. If I find out that it's going to decline in value by more than 20%, I say it's a sell. But if it is in between minus 20 and plus 20, I'll say it hold. That's like stable. That's what I'm saying. Now, you are saying something is stable, but the range in between is about 40%. So now the question is, this outlook is stable. But which part of it is it? Is it leaning toward positive or is it leaning toward negative? No. They try to make it balanced, and it is very judgmental. The same issues that they look at that made them say, okay, you know what, you guys are stable, is the same issues that S&P looked at and say, you know what, we count you guys as negative. Now, I said earlier, I said Nigeria should be staying and say, oh, thank God, at least we have a sigh of relief that Fitch is saying that we are stable after S&P say we are negative. But yeah, that's at the headlines. Like Bella pointed out, there are issues in between. And now the question is, how do we fulfill them? How we will give Nigeria a knock rather than press for them. But again, it's
why would you give Nigeria a knock?
Good.
Because you're entitled to your own opinion.
Of course,
just like
it's opinionated
Fitch
again.
And Standard & Poor's.
It's opinionated. But if you look at all those positives that we have inside this place, yeah, Nigeria is resilient, we have that. But we are doing even worse than what we have done before. For example, they mentioned about our external reserve, how we have grown it. Yes, we have grown it to 39.5 billion. But it hasn't even, we have not reached the peak we had in May 2013, which was 48 billion. But you know what I'm saying? That's one. Now, we need to get back to that place, and even more, before you can say, yes, we are moving toward a positive light. Now, we said our inflation is stable and is in single digit. Yes, but it's in a high rate, single digit. Our pair average is 5.1%. So, tell me something. How have we done so very well? Yeah, we are stable, like I said, but are we pointing towards positive or are we pointing towards negative? Even according to Fitch. So he said a lot of risk involved. There's political risk. Now, part of the positive is that we have done some structural reform in power, in agriculture. We're not starting seeing the benefit yet. Yes, we have electronics reaching to the farmers, and therefore we have quite a number of people that are registered on the scheme. But the question is, how has it affected output from agriculture? Maybe not yet. Yeah, we are going there, but we don't know. How soon we're going to get there, we don't know. Same with power. Yes, we are doing reform in power. We are trying to resolve all the problem, but power generation has not increased yet.
Okay.
So those are the kind of things.
We're just coming gradually. We're just trying to step, one step at a time, and we believe that very soon the power sector will record the necessary change, the required change that we're all looking out for. Let me get back to Abiola. The rebasing of the Nigerian economy was one of the things that were noted in the reports by Fitch, and I think that in a way, did it in any way contribute to this stable outlook that we've got?
I think it's quite interesting to notice that the rebasing of the Nigerian GDP has the positive contribution and it has some negative contribution, and I'll take it from this perspective. If you look at the rebasing of the GDP, for example, that actually moderated the public debt ratio to just about 12.5% of the 2013 GDP. And that's largely because we now have a bigger economic size as against what we had before the rebasing. So which is positive when you look at the ratings criteria of any rating agency, which of course takes into cognizance the size of the economy vis-a-vis the public debt stock. But beyond that, I think one important thing that we also have to realize is the fact that the rebasing of the GDP also exposes the laxity of non-oil revenues. For example, we're looking at non-oil revenues just in the threshold of just around 3.5% of the GDP as we speak now, which of course alludes to the fact that the government needs to do more in terms of increasing the tax base and of course ensuring more tax penetration in the country, which is very important for the government to be able to mobilize adequate revenues to fill some of these infrastructural gaps that we've seen. But beyond even the non-oil revenue, which is important, I think another important thing is to also look at what the current account balance is, particularly that we have a surplus. Yes, it's still a surplus, but the surplus actually declined from about 5.6% to just about 3.4% current account surplus. Typically your current account surplus is a good indicator of your ability to actually meet up with your foreign currency obligations, particularly when you're looking at Nigeria, which is largely an import-dependent country. So the rebasing of the GDP also exposes the fact that the current account surplus, which we've always seen to be a major strength of Nigeria when you look at the ratings criteria, now falling just on the back of that rebasing of the GDP. So there are some positive factors that are, of course, alluded to the fact that Nigeria deserves a stable outlook, but of course the rebasing of the GDP itself also lowered some of the ratings in terms of the ratings criteria for Nigeria. So it's neither here nor there, which is why I said it's a whole mix of a balanced view, looking at what the positives are and looking at what the negatives are. And like I said, it's an opinion, and don't also forget the fact that ratings are meant to be reviewed from time to time, depending on whether there's an event that actually deserves a ratings review for a particular country or for a particular issuer, which may be a corporate. Even it might even be a subnational or a municipal government. So in my view, I think the most important thing is to actually continue to watch some of the fundamentals of Nigeria, particularly the oil price, which, like I said, is falling very fast now. We're at 30 months low, and we're expecting OPEC to actually have another meeting in November, sometimes in the third week of November. In the last week of November, OPEC is going to sit again. I think that meeting is going to be very, very decisive, and that would, to some extent, give some indication of where OPEC expects crude oil price to end the year. Particularly, we're beginning to see more and more supplies from the non-OPEC countries, particularly the US. So in my view, I think these fundamentals is very important for us to continue to keep a watch over these fundamentals, which of course might warrant a revision, both from Fitch and even S&P, and even Moody's might even come in and do a revision of the Nigerian rating. So I think it's very important to continue to watch that space and see how each of these fundamentals that affect the ratings of Nigeria pans out. Fitch may come out tomorrow and say Nigeria no longer has a stable outlook, and S&P may come out and say Nigeria now has a stable outlook, or even upgrade the Nigerian rating perhaps to BBB, which is an investment grade. So it's not impossible. The most important thing is to watch the fundamentals of the economy, and the government needs to continue to work in that direction to ensure an improvement in those fundamentals.
Let's dwell with the positive fundamental. Let me come to Femi. How does this say about the long-term perception of Nigeria as an investment destination, as an investment haven for global investors?
I mean, it's a positive. Again, one, the headlines say you guys are stable. I mean, okay, there's no problem. We are not seeing any danger in between. So, I mean, that's something positive for investors to comment. Then some other issues that were pointed out as well. It's something that can drive investors to say, okay, now we have seen some positive development in Nigeria, so let's come into it. One, you guys have started building up your reserves. You start building up your crude oil reserves and a crude oil account for buffer for any kind
the
of
excess crude account.
Excess crude account. Now, you guys, you are working towards inflation. The target for the MPC is between 6 and 9%, and you guys are within it, and everything. So it makes a kind of stability. Now, you are doing some reforms in the in other sectors, like agriculture, like the power. Hopefully, if the PIB was passed, then the oil sector to face some. I mean, right now, even though it hasn't been passed, there's the hope that very soon something will happen in that area as well, so that the sector, the oil sector, who is the dire need of some investment, can actually take up as well. So that are drivers for investors to come. And let me tell you, investors, there are different types of investors. There are risk takers, there are risk averse, but there are risk taker guys. Even if you say this is negative, some guys see opportunity in that as well. So there's always opportunity even in crisis. So at any point in time, investors will always look around to see where they can get opportunity from. But right now, even you need to assess, I've affirmed that a few days ago, that Nigeria is still a preferred investment destination. Even
despite the negative,
the fact that FDI is declining in terms of percentage compared to other guys, but at least in terms of volume, the size of FDI in Nigeria is still bigger than other African countries.